Someone just opened a $16 million XRP long position. With 20x leverage. They sold their Bitcoin to do it. 52.67 Bitcoin. Over $3 million. Sold. On Hyperliquid. And then they took that cash and opened a leveraged XRP position worth $16,300,000. By the end of this video, you'll know exactly why they did it and whether you should care. Here's what happened. On July 4th, just yesterday, on-chain analytics platform OnChainLens flagged a new wallet. The wallet starts with 0x243. It was essentially empty. Then it woke up. The wallet deposited 52.67 Bitcoin onto Hyperliquid. At current prices, that's roughly $3.26 million. Then they sold it. All of it. And immediately opened a long position on 14.189 million XRP valued at roughly $16.3 million. 20 times leverage. That means for every dollar of their own capital, they borrowed 19. The entry price? Right around $1.14 where XRP was trading in real time. Without leverage, that $3.26 million would have bought them about 2.86 million XRP. But with 20x leverage, they control 14.19 million XRP, about 5 times the exposure. But who does a trade like this? And more importantly, where did they get the conviction? Here's where it gets interesting. The wallet 0x243 is a new wallet. Fresh. No history. That's actually a common whale tactic: spin up a new wallet for a major position so you can't be tracked from previous trades. But here's what we can piece together. The ability to move 52 Bitcoin in a single deposit on a DX, not a CX, means this person knows what they're doing with self-custody and DeFi. This isn't a noob hitting 20x on a meme coin. And they're not alone. Just 2 weeks ago, on-chain data revealed another whale sitting on a $30.9 million XRP long, also on Hyperliquid, also 20x leverage. That position is currently showing unrealized losses of about $2.6 million. So we've got at least 2 whale-sized XRP longs on Hyperliquid right now, totaling roughly $47 million in exposure. Both using maximum leverage. That's institutional-sized capital with retail-sized risk tolerance. The timing of this trade is not random. On July 3rd, just one day before this whale moved, XRP flashed its first buy signal since mid-June. The Tom DeMark sequential indicator triggered a buy signal on the daily chart at $1.06. For those who don't speak trader, this is a timing indicator that's historically called major XRP bottoms with surprising accuracy. Over 830 million XRP last changed hands in that $1.06 zone. That's a massive support cluster. Analysts noted that if XRP holds above $1.06, the buy signal points toward a rebound to $1.27 and then $1.35. But there are 4 converging factors here. 1. The technical buy signal. 2. The $1.06 support zone with 830 million tokens traded. 3. Aggregate whale accumulation on Hyperliquid. And 4. Historical seasonality. July has historically been a strong month for XRP. Last July, XRP hit its all-time high of $3.65. We're currently 69% below that level. So this whale is betting on a repeat of last July's rally, or at least a significant move higher from these levels. But there's a catch. And it involves that 20x leverage. You might be wondering, why not Binance? Why not Bybit? Hyperliquid is a decentralized perpetual exchange built on its own L1. It's become the go-to venue for whale-sized leverage because of 3 things. 1. Full on-chain settlement. No withdrawal freezes. No maintenance mode. The whale controls their collateral directly. 2. No KYC. You can fund from any wallet and trade immediately. 3. Deep liquidity. Hyperliquid's total open interest just hit $6.67 billion. That's competing with centralized exchanges. In January, Hyperliquid's OI was $9.6 billion. It dipped. Now it's recovering. Whale activity like this suggests smart money is returning. And for XRP specifically, Hyperliquid has become a battleground. The long-short ratio has been swinging wildly as whales and retail traders bet against each other. So what happens if the trade goes wrong? Let's talk about the danger zone. With 20x leverage on a $3.26 million margin at $1.14 entry, every 1% drop in XRP's price represents a 20% loss on their margin. A 5% drop, that's XRP falling to about $1.08, and they've lost their entire margin. The liquidation price on a 20x long at $1.14 is roughly around $1.03 to $1.08 depending on the specific leverage and fee structure on Hyperliquid. Here's the part that matters to you. If XRP drops just 10 cents from current levels, roughly 9%, this entire position gets force liquidated. That's $16.3 million in XRP hitting the market in a single cascade. But if XRP holds above $1.06, where the buy signal triggered and pushes toward $1.27, this whale stands to make millions. At $1.27, a 20x position on 14.19 million XRP means approximately $3.7 million in profit. At $1.35, about $5.9 million. This is a binary bet. And the whale is betting the house. So here's the bottom line. A sophisticated whale sold $3.26 million in Bitcoin to open a $16.3 million XRP long at 20x leverage. They timed it with a technical buy signal at a key support level. They did it on Hyperliquid, the fastest growing venue for high leverage crypto trading. The bet is simple. XRP goes up from here or they get wiped out. Whether this is genius or recklessness depends entirely on where XRP goes in the next 48 hours. If you want to track moves like this before they hit the mainstream, hit subscribe. I track whale activity every single day. And drop a comment. Is this whale going to print millions or get liquidated? I'll pin the trade's live status in the comments.